the Traders Club. Today is August 31st, 2018, Friday. As I record this video, market should be open another 2 hours. So I am recording this intraday. Hope you guys had a good week trading this week. Let's do Spider, IWM, and the Qs, and we'll call it a day. Today is going to be the last day of August trading. We're going to get into December trading next Tuesday. Market is closed on the 3rd of September for Labor Day, and I think that's a good thing. I love that when we have extra day, so we don't have to look at the market, and I love that how we can have to rejuvenate and kind of refresh our brain and our minds and come back to the market on Tuesday. So hope you guys have a wonderful Labor Day weekend this weekend, 3-day long holiday weekend here. Let's start with the Spider. Last week we talked about this rising channel, right? This rising channel. I think when was the last week? That was 24th. So yeah, see, it was on this day right there. So on Monday we gapped up and then we made a move here. We're pulling back, retesting this channel. So at this point, you know what I mean, it may gap back in or not. I'm not sure exactly how it's going to play out, but we do have this gap here. And bulls have opened up many gaps here. You can see bull opened this gap, 2, 3, 4. We got total of 5 gaps. So this, here, let me do this. Put this in there, put this in there. So should the price continue lower earlier next week, you know, 288.84, 287.57 should provide as support. Another thing could possibly happen just to shake people out. We'll be gapping down on Tuesday, making this into an island reversal, and that's a possibility. And sometimes you see shenanigans like that in all-time high price, just so that market can punish those who are chasing, and market can, impute that confirmation of some sort that bears think that they are right, that this thing is the top here, and they don't think that all bulls are going to be trapped here before this thing flushing everybody out. Obviously, that's not going to happen. So, but what's going to happen is that could be happening here. So, because we slightly get up here, pulling back, we're retesting the gap area. If we do see a gap down on Tuesday, and if this thing turns into a island top reversal, that island top is going to be, it's going to affect the minor term movement, but not in the intermediate or primary. So what is going to happen is it may continue lower and retest this area, or even retest the, this rising channel support area before possibly getting back over, consolidating before getting back up. I'm not sure exactly how it's going to play out, but I won't be surprised to see some decline, or if we do see that island reversal. If we don't see island, if this thing continues lower and fill this gap, that should provide us minor term support, and we can follow up on that going into next Friday, right? Next Friday, which is 7th. So that's kind of what we're dealing with here. Obviously, we made a new high after consolidating, pretty much building base for about 7 months here. The market starts to become more docile after it has created or, cleared this major pivot at 279. As you can see here, we talked about this. Below this level, things were very hectic. I mean, we'll see these down days are very, very volatile, right? Even when we do see a down days, even this one took about a month to come out of that. This also took about a month to come out of that. But after we breaking out of this, which is a major, major pivot, and this was a level that bulls wanted to conquer to kill the downside pressure from the bears. Obviously, bears had these 2 downside gaps now filled. And ever since then, prior resistance, new support, 20 MA rising. Ever since then, we do see obviously some declines here and there, but market has been so much more docile. Market has not seen a huge amount of volatility or downside move, as you can see. I mean, these were pretty big. It took a while to recover, but ever since we broke above this level, the sentiment has changed. It became more bullish, as you can see. Well, now that we got new all-time high here, we were even breaking above this channel. And if we do see a support from here, let's say if we do see a bounce on Monday, or I'm in Tuesday, right? If we do see a bounce and continues higher, let's say if we do see that again, we'll follow up next week, then I can see the market grinding higher. I'm not sure if we're gonna see like a big move. We may see like a grindy higher, like this. You can see right here. That's how bulls move. Bulls never really make a big move in one day, but it's a cumulative, kind of a continuing series of these tiny candles of move. That's how bulls like to make it. This is the reason, one of the main reasons why most people are short. Do you know why? I'll tell you why. Because they're scared. They're scared cowards. And they want to come into the market and they think they figured this out, and market has brutally punished them over and over again, right? And they experience what it felt like to go through this. So now they're scared and they don't understand the different market sentiments. This is a reason why most people are short, because they always feel like bull bears are winning. But statistically, bears not winning, guys. You know what I mean? But when the bears come, they do come fast. They bring things down. But bulls, man, they take things so slowly. It takes a while for the bulls to make a run, because they run in these small, tiny candles, right? And so this is a reason why a lot of times when these shorts, what they do is they're so impatient. They want to make money quick. They can't, you know what I mean? This is a reason why they always lose. They always lose. They're always fearful. And then when the market continues to grind higher like this, they're whiny, they're crying, there always seems to be miserable or angry, or they're always, you know what I mean, always talking about how, you know, the whole thing is going to crash down because of this reason, because of that reason, right? So if we do see this level holding, and if we do see continuation here, we could see a grindy move above this rising channel. Grindy move like this. And then we go like 300, pull back, and then get up like grindy move. But if we do come and fill this gap, it could get a little bit volatile, but we could continue higher. If we do see an island reversal though, then we may come all the way down to about 283 and retesting this level here before going back up. You know what I mean? Or building a base before going back up. Again, we'll have to reassess the situation, you know, to how the market played out next week. We'll follow on Friday. We'll go from there. But as of today, market is bullish. Bullish in the minor term, bullish in the intermediate term, bullish in the primary term, bullish in a major primary term. I do expect 300. This 300 targeted. I've been talking about this 300 target since pretty much all year long. If you guys remember, 300 I think for sure is doable this year. I think maybe even doable by, you know, end of November or by Thanksgiving. And then if market is really decided to make a move here, I think 310, 320. 320 is a possibility before this year end. It's a possibility, but 310 is more likely. But 300 probably going to get there before December, maybe even by Thanksgiving. We'll see how that plays out. But that's looking at things from intermediate to primary term. Obviously in the minor term, we probably going to have these ups and downs. And for somebody like me, in my time frame, the way I trade, the way I invest, I really don't care how it's going to play out next week or week after that. I just want the market to be healthy in the primary to intermediate term so you can continue to cultivate uptrend. As long as we can do that, 300, 310, 320 is a possibility this year. And we'll follow up on, you know, this minor term movement here next week and see how that plays out. See if that gap remains open or becomes island, or if it fills. We'll follow up next week here, but everything looks very bullish here. 20 MA is a moving average to watch because we acted support here and then it acted support there, and 20 MA is currently trading at 285. So should the price decline early next week or towards the midweek next week, you want to watch 285 as a potential support there. But again, 288, 287, there's a gap area in that vicinity. That's going to provide minor term support unless we see an island reversal. Let's go to Russell 2000. Look at this here. Uptrend support, all hell's break loose. That became support. Became the bottom, got up here. A lot of people who missed out on this move, they thought that this is going to be a double top, and they thought this is going to be a rollover. Well, that became the bottom and continuing higher. That's why people who doesn't understand the primary term uptrend and intermediate term uptrend, how it moves, they're always so concerned about these slightly below or breaking below these support, and the market continues to punish them. And I've been harping on this long enough. I think if you've been watching my videos long enough, I think you start to assess the situation a little better when you do see this uptrend support breaking below. That that's not the end of the trend. Just breaking below, a lot of times it becomes a trap, so that market can shake people out before going higher. Market can create new fresh of supply. So these so there will be people, there will be fund managers maybe or people who wants to buy your shares cheaper before rising it back up. And it's always the retail traders that are suckers. You know what I mean? They sell at the lowest point, and then they always buy at the highest point. I mean, they don't like to admit it, but that's what they do. You know what I mean? And it is hard to buy the dip. Something we talked about in the past is that it is going against your human nature to buy the dip. Why? Because obviously, your whole life you've been trained to what? To save when there's deficiency in your checking account. To spend when there's surplus, right? That's why when you get your first paycheck, that's when you tend to pay your bills. If there's leftover, you go out to eat, you buy some clothes, whatever, right? But when there's a deficiency in your checking account or savings account, what do? You save. This is the reason why when market pulls back, when there's a deficiency in your trading account, you tend to sell and save but not buy. And when there's surplus in your account, when you see the market going up, that's when you tend to want to buy, because you've been trained this way. You've been conditioned this way in your whole life. But what you should be doing is when there's deficiency, that's when you want to buy. When there's surplus, that's when you want to sell, which is going against your human nature that you've been conditioned to do your whole life, to save when there's deficiency and buy when there's surplus. Remember, in the stock market, you know, the opposite of that, right? What you've been conditioned to do in your whole life. So you want to sell when there's surplus, and you want to buy when there's deficiency. And it is difficult because you have to go against your human nature. Russell 2000, 180 is very much doable, I think. Maybe prior to Thanksgiving, but 190, 200 is also possible. Russell 2000, obviously, 13% year to date. Nasdaq still leading this market after 35% gain last year. But Russell 2000 only had 15% gain last year. So I think Russell 2000 is also, the small caps are going to do really well second half of this year. And also I talked about, back in March, February, that how I believe that Russell is going to lead. And I think, the small caps are going to do well this year. Right now, obviously, it's been kind of moving sideways here a little bit. I won't be surprised to see this thing kind of seeing some kind of a red day, maybe early next week, maybe 1% down or something like that, just to shake some people out, just because people are, what do you think people are doing? They cleared this, they went short here, they got burned, they flip it, and then they say, well, I'm not sure what it's going to do. I'm going to wait, see if it makes new high, and then they start chasing it up here. What do you think the market is going to do? Well, market is going to punish them and then get up higher. So I won't be surprised to see some shenanigan going into early next week. Sideways move a lot of times in the minor term is actually kind of a bit bearish for the stocks. A lot of times, not stocks, but for the indices. Many times when indices move sideways, it tend to pull back, before going higher. Even here, right there, you can see right there, it made a sideways. I mean, we did see kind of a gap up move, because, what happens is there's so much tension. When there's a sideways move like this, here, I'll show you like this. You see like there, when the market moves sideways, there's so much tension. There's so much impatient retail trader. They're like, oh, okay, it's moving sideways. I don't know what I'm going to do. And what they say is, I'm going to wait. I'm going to wait till see what happens before I get long or short. And the market knows what you're thinking, and then it gives you that gap up. Do you see this gap up? And then they finally, aha, that's my setup right there. That's a gapping up. They chase it. And what do you think happens? It punishes. You see what I mean? So that's something like that could happen here. I mean, it's gonna get back up, but I don't know if it's gonna, pull back and get back up, or continue to grind higher. See, that I really don't care. And trying to figure out exactly how that's gonna play out in the minor term, well, that is gonna be task that you want to pull your hair out every time. This is a reason why I don't want you to focus on the minor term fluctuations, but I want you to focus on intermediate term trend and a primary term trend and understand some of these kind of a 50 MA, 100 and these moving averages, understand how the market is behaving in an overall perspective, so that in the minor term shakedown, you're not going to be emotionally stirred up. Qs here, Qs continue to make its move here. We are actually retesting this level, as you can see there. So this is resistance, 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 resistance. Once we break out of this, probably going to go faster, but again, we're kind of pulling back. We saw a great move here. We're seeing a little bit of bull flagging. We may break out or we may fail. I'm not sure. Nobody knows. You know what I mean? So in the minor term, it could go either way, but obviously in the intermediate term, we're in an uptrend. We're cultivating higher lows here, and so everything looks good here. See next week if we can break out of this rising channel, right? I mean, what I'd like to see is something like this. That would be a perfect scenario. But what could potentially happen, breakout, get back in inside, and then some shenanigan, and then get up. I mean, market can give you that, especially it made a good move here, almost 20% year to date, and that's a phenomenal move. While most people thought that there's no way the Qs can continue higher, and they thought that in 2016, they thought that 2017, they gonna think in 2018 they got burned, and they're gonna continue to think that as the market continues to move higher. Again, I think S&P is getting ready. It is preparing for 300, and then 310 through 20 also is a possible before this year end. You guys enjoy your long Labor Day holiday weekend, and good luck trading next week.